Hello traders, and welcome back to Explain the Charts. Today is November 6th, 2025, and we're taking an in-depth look at Alphabet, ticker symbol Google. The stock has been on a phenomenal run this year, surging 48% and recently hitting an all-time high after a spectacular third-quarter earnings report. There is a whirlwind of news surrounding the company, from incredible financial performance to major advancements in the AI space, so let's first break down the fundamental drivers. First and foremost, Alphabet absolutely crushed its Q3 earnings. The company reported its first-ever $100 billion quarter, with earnings per share of $2.87, vastly exceeding the $2.27 analyst consensus. Revenue also saw a massive beat, coming in at $102.35 billion, a 16% year-over-year increase. Drilling down, we saw impressive growth across the board. Google's core search advertising revenue grew over 14%, and Google Cloud revenue surged by 34%. This cloud growth is particularly bullish, as the segment now boasts a staggering order backlog of $155 billion, signaling robust future demand. This strong performance is directly tied to the company's aggressive push into artificial intelligence. Analysts are overwhelmingly positive, citing upcoming catalysts like the new Gemini 3 AI model and the launch of the 7th-generation Ironwood TPU, which is poised to be a stronger competitor to NVIDIA's chips. However, it's not all smooth sailing. Investor concerns remain about competition from rivals like OpenAI's ChatGPT, and Google is still navigating significant antitrust challenges, particularly in its digital advertising business. A ruling on that case, expected in early 2026, could have a major financial impact. Some reports also note modest insider selling and general market volatility as potential short-term headwinds. Now, let's turn to the charts and see how this news has translated into price action. Looking at the daily chart, we can see a clear and powerful uptrend that has been in place for most of 2025. The stock has consistently made higher highs and higher lows, a classic sign of a healthy bull market. The most significant recent event is the massive price gap that occurred on October 30th, following that blockbuster earnings report. The stock gapped up from a close of $274.57 to open at an all-time high of $291.59. This level, $291.59, is now the most critical resistance level to watch. However, notice the candle on that day. Despite the euphoric open, the price sold off throughout the session, closing much lower at $281.48. This created a bearish-looking candlestick pattern, suggesting significant profit-taking and the presence of sellers at those record highs. This price action tells us that while the long-term sentiment is incredibly bullish, there may be short-term exhaustion. Since that peak, the stock has entered a period of consolidation. Let's zoom in on the price action from September onwards to get a better look at this recent structure. In this focused view, you can see the strong rally leading into the earnings announcement in late October. The post-earnings sell-off from the $291.59 high established a new trading range. The key support level in this immediate range was formed during the lows of the past week, right around the $276 to $277 area. The price has been bouncing between this $277 support and resistance near the $286 mark. This type of consolidation is normal and healthy after such a massive upward move. The market is essentially pausing to digest the news and decide on its next direction. The volume on the earnings day was immense, confirming the importance of that event. Volume has since tapered off during this consolidation, which is typical. A breakout from this range on high volume would be a very strong signal. To understand the very near-term sentiment, let's switch over to the 15-minute chart to analyze the last few trading sessions. Here on the 15-minute chart, we can examine the recent battle between buyers and sellers in detail. On November 3rd, the price chopped around the $283 level. Then, on November 4th, we saw a test of the lower boundary of our consolidation range, with the price dipping to the $276s before finding buyers and recovering. Yesterday, November 5th, was quite bullish in the short term. We saw a strong push upwards from the open, breaking through the minor resistance around $284 and closing strong near $286. This move suggests that buyers are stepping in and attempting to resolve this consolidation to the upside. The price is now pushing against the top of this short-term trading range, setting up a potentially decisive move. A sustained break above $286 would be the first bullish confirmation signal for day traders and swing traders. Now, let's switch back to the daily chart to put it all together and discuss our outlook. So, what can we expect from Google stock moving forward? Let's outline the potential scenarios. The bullish case is supported by powerful fundamentals and a strong long-term uptrend. If buyers can push the price decisively above the current consolidation resistance around $286, the first target would be a retest of the all-time high at $291.59. A breakout and close above that record high would be extremely bullish, opening the door for a move towards the psychological $300 level and beyond. Given the strong earnings and AI narrative, I would place a 70% probability on this scenario playing out, provided the broader market remains stable. Conversely, the bearish case hinges on the failure to hold the highs and the potential for a deeper correction. If the price gets rejected from the $286 level and breaks below the recent support at $276, it would be a warning sign. A break below this level could see the price fall to fill the earnings gap, with the next major support around the pre-earnings price of $275. If that level fails, a deeper pullback towards the September lows around $235 could be possible, though this is a much lower probability event at around 30%. This bearish scenario would become more likely with any negative market-wide news or a specific negative catalyst for Google, such as an unfavorable antitrust ruling. So to recap, here are the key price levels to watch. Major resistance is the all-time high at $291.59. Immediate resistance is at $286. Immediate support is at $276. Major support levels are at $275, which is the pre-earnings level, and then much lower around the $235 area from the September lows. Keep an eye on news related to Gemini 3 adoption and any updates on the ongoing antitrust lawsuits, as they could serve as major catalysts. The fundamental picture for Alphabet is undeniably strong, but traders should remain cautious and watch for a confirmed breakout or breakdown from the current range before committing to a new position. Thank you for joining me today at Explain the Charts. Please remember, this video is for informational and educational purposes only and should not be considered financial advice. Always conduct your own research and consult with a financial professional before making any investment decisions. If you found this analysis helpful, please hit the like button, subscribe to the channel, and let me know your thoughts on Google in the comments below.